Ladies and gentlemen, welcome back to the High Performance Trader. Today, I want to break down market context. See, you can have an edge, you can have an approach, you can have your criteria. You're right, you can understand everything about the market, you can know all the big words, all the technical analysis, trend lines, X, Y, Z. But if you cannot understand the market context, you're going to be behind the curve constantly. Right? See, it's our job as day traders not to be right. Right? It's our job to understand what large money's doing, right? And to do this, we have to swallow our pride. We have to swallow our ego, right? We live in a time where there's so much information out there. There's all this content, right? There's all this knowledge out there, and what happens is we consume so much of it. We consume, and we're not putting in the reps. Right? I meet so many traders on a daily basis, right? And they're frustrated because they're not getting the results they want. And the truth of the reality is they're not putting in the reps. They're not logging the trades. They're not reviewing the results, right? They're not back testing, right? They're not executing properly. All they're doing is consuming. Well, this guy says this guy says that, right? And then they come up in their mind with these false beliefs of what they think works. And then when they approach the market and it doesn't work, they're frustrated. See, we have to let go of being right. If we ever want to become rich, we have to let go of being right. There's an old, I think it was Zig Ziglar saying, you could either be right or you could be rich, right? And the market is a perfect example of that. It's not about being right. It's about having a clear understanding of what's going on based on what large money's doing. We can't move the market. We don't have the capital. We don't have the influence, right? We don't have the connections. We don't know the people. We cannot move price. That is a known fact. Right? That will always be a fact. If you're a retail trader and you do not have massive amounts of capital, you cannot move the market. It's an auction, right? So you must swallow that and be like, okay, no matter how much knowledge I have, no matter how much understanding I have, no matter how many videos I've watched, I do not and cannot move the market. So it's up to me to understand who is moving the market. Is it buyers or is it sellers? And then based off what I'm looking at, what sort of decisions do I want to make that can help me reach that profitability? See, it's the approach. It's the application. It's not the education. It's the application, right? So today in this video, I want to break down a trade that we took Friday, 6/28/2024, right? And the approach I used to be able to get in and out of the market, right? And this is where market context is so important. This is why I love trading pint numbers, right? So I could break down this day and be like, oh yeah, price fell below the 50, came up, we retested, I took the market short, oh, it was perfect, you should do that too. But then you don't gain any skill in learning to read the context of the market, right? So let's bring it back to the whole week, right? For us to get the proper understanding of the market context, we have to look at the whole week. This whole week price has been trading in a range, right? From up here, which is 547, all the way down to, we'll just say 543. So the market has been trading in this range all week. So going into Friday, I was looking for a move to the upside above 547 to 550, right? That was our bullish target. Or I was looking for a move to the downside below 543 down to 540. Now this is the thing. I have to be understanding, right? So basically, let me bring it back. We're trading in this range, right? We're susceptible to breakouts to either side. Now, I'm not sure what's going to happen. For me to understand the context, I have to watch my pint numbers. See, your pint numbers, they're not just lines on the chart, right? They're literally indications of market context. Right? If buyers can control certain pit numbers, I'm bullish. If sellers can control certain pit numbers, I'm bearish, right? So basically in a nutshell, we're going into Friday. I have end of day. I have previous day high. I have previous day low, right? So one of the main reasons I started using pit numbers is I used to constantly watch the daily time frame. See, the daily time frame is going to give you the market context that you need to understand, right? Like, okay, if this holds, I want to trade this way, right? So going into Friday, it looked like this on the daily time frame, right? So basically, what I'm doing here is I'm going, okay, if and when price can hold the highs, we have this move up to all-time high, right? So this is the importance of the daily time frame. I'm going, okay, if we can hold previous day high right here, I like longs up to 550. Right? If 550 can't hold, we're going to see a move back down to previous day high. But if previous day high cannot hold, previous day low makes a lot of sense. You see where I'm getting at? I'm looking at the daily time frame as if it's a 5-minute candle. I'm going, okay, if this candle could break the high of the previous candle, that's very bullish. But if it can't hold, it's very bearish. This is market context. If then statements, right? To all my computer programmers out there that write code, if this happens, then this. If this happens, then this. We need to be able to understand that concept, right? So now, with the understanding of the daily time frame, right? Now we break it down in a much smaller time frame. And we go, okay, here's our pit numbers. Previous day high is lining up with Monday's high as well. Go figure. Why? This is where all the liquidity is. Bring it back to large money. For us to understand who's in control of the market, we have to watch these levels. This is where the liquidity is. This is where the volume is, right? So I'm looking to trade off these levels, especially if I can tell through chart patterns who's in control of them, right? So right here off the rip, you're going to see pre-market, we've defended previous day high. We come down, right? This is textbook. This is textbook right here. It's disgusting. It's disgusting how well this works. Classic break and retest. Notice how we're gapping up pre-market. We have all this liquidity down here at previous day high. Okay. Right in the morning, price comes into these levels, previous day high, almost end of day, but doesn't tag end of day. Now remember, there's also massive amounts of liquidity right here, right? This is where a heavy amounts of volume lie, and we'll focus on that later in the day. And then we also have massive amounts of liquidity down here at previous day low. So here's our pit numbers. We're in a bullish break and retest, right? We've broken above the highs. We're coming down for a retest. There were a lot of sellers at this level that couldn't get out of the market, right? And now once price comes into this level, these guys start stomping out, right? It's basic market psychology. They're in losing trades. They want to get out of them. They're in such large positions, they can't just exit the trade. They need the trade to come back to a heavy volume populated area, right? Heavy populated of liquidity. So price comes into 547, buyers show up with strength, and this thing just takes off. I mean, this was insane. We were live on the Discord. I couldn't really get an entry due to risk. So this was a tough one to sit back and watch. But we demonstrated the patience. Yeah, looking back, of course I could have gotten in off a couple different areas. But being on the live, I wasn't ready to take a risky trade, especially for my team. So I stayed patient. Notice how price rips right into our target of all-time high, level to level, market imbalance to market imbalance. It's market principle. It's market structure, right? This is how it works. Now, if and when buyers can defend this level, I'm looking for other longs, and I'm being patient. Notice the red candle we get, right? We start to get a very strong rejection from this level. We get a lower high, and then price starts to break. We then snap below the 50 EMA. This is a very bearish sign. And once again, I still can't just really find the entry I want, right? These candles were literally moving. The range was around $1 a candle, right? My stop loss accounts for like 70 cents tops. So I'm being patient. If I don't see my edge, I don't see my edge. I really don't care, right? I was ready to write this whole day off if I didn't see my setup. That's my approach. I don't care. The market doesn't control me. I control me, right? And then price comes down, starts to consolidate. Now, we come into the 50 EMA. So at this point, I'm in my mind, I'm going, okay, I have to understand the market context because we're still above open print. We're still above previous day high. We're still above end of day, right? And I can't be ignorant to the fact that, yeah, okay, we're above these levels. I must be bullish. That's not the truth, right? The truth is I need to understand the market context to understand what's the next highest probability move. If I whip out that 1 hour time frame, right, you're going to see we're massively extended from the 50 EMA on the 1 hour, right? We've ripped into the all-time high level and rejected. Look at the 1 hour time frame candle. This is where candlestick analysis is going to be your superpower. Do you want to long the market after seeing a candle like this? Maybe you do, I don't. This candle is what we call a Bayesian candle, a bearish Bayesian candle where the wick is more than 50% of the body. That is a very bearish candle. Some call it a hammer, inverted hammer, whatever you want to call it. But that candle does not represent strength. Also, we have fallen below pre-market high, another indication of weakness, right? If you're ever above a level and then fall below it, that's usually telling you in a contextual fashion, right, context, that those buyers didn't have the strength to hold. So now I'm going, okay, considering end of day hasn't been reached yet, right? There's a lot of liquidity down here. That would make a beautiful downside target in a bearish fashion. So now it's to the point where I just have to see my criteria. What's my criteria? A break above or below the 50 EMA, a retest of the EMA clouds, which is the 9 and the 20 EMA, and I want to see a candle reject, right? So we rip up into this level and this candle rejects. So now when this candle comes up and tags this cloud, I am now in the market short with a stop above the 50. Boom. That's my criteria, right? I'm willing to do that based on market context, based on the fact that we had this massively large breakout to the upside and it cannot hold. See, we have to be able to understand the context of the market to put on the trades that make sense. I struggled with this for a very long time, right? I struggled with market context. I'd be like, oh, it's a double bottom, I gotta go long. It's a double top, I gotta go short, or whatever your edge is. Without understanding the context on higher time frames, none of this even works, right? You have to understand what's happening on a bigger picture, right? And this is gonna help you understand the story of the market. It's not our job to trade, it's our job to understand the story, right? Price comes into that 50, rejects, I put on my short play, first target open print, second target previous day high, third target end of day, next target previous day low, right? So price rips up into it, rejects, comes down, and now I don't care. I'm in the trade. There's nothing else I can do, right? I'm not watching the VIX. I'm not watching the level 2. I'm not overcomplicating it, and I understand that works for a lot of traders, and that's great. That's fine. I'm speaking to the traders it doesn't work for, right? If level 2 is not working for you, if the VIX isn't working for you, then maybe you should just try something different, right? Not every trader's the same, right? You don't have to do what this trader's doing just because he's a multi-million-dollar trader. Do what works for you. Put in the reps. Put in the work. Stop trying to be right, Swallow the pill, okay? Price rips into our level. We take a short. And now, once previous day high breaks, right? Let me get rid of this line. Once previous day high breaks, right? Let's bring it back to that 1 hour time frame. We had an extremely bullish chart pattern right here. We ripped above previous day high. Now, previous day high has snapped, right? This is so bearish. Think about it. How many times have you been trading a break and retest, and then when that support doesn't hold, what happens? It snaps and goes to the next critical level. It's exactly what happened, just on a larger time frame. So now I'm a day trader. I have to be able to take this information and go, okay, previous day high did not hold, right? If previous day high doesn't hold, and speaking from a context standpoint, the next target is going to be PDL, right? So we took the market short. We took it into end of day, right? Took profits. Price rips back up into previous day high. We can't hold. We take the market short. And then notice, price rips back into it. Cannot hold, and sinks all the way to PDL. So notice, guys, using context, right, is going to be your superpower. Right? But to use context properly, you must first realize you cannot move the market. You cannot predict the market. You have to admit that. You cannot predict the low of day. You cannot predict the high of day. You can only approach the market from a state of probabilities, meaning what's the next highest probability, probabilistic outcome, and how can I make money based off that information. I hope you guys enjoyed this video. Market context is one of those things that you need to understand, right? If you guys liked it, make sure you hit a like, subscribe. If I add any value to your trading, make sure you follow us. And if you want to get involved with our team and get involved with Trader Bootcamp, it's a phenomenal resource. I break all of this down. I'll see you in the next lesson.